Taiwan's exports, a central driver of the country's economic growth, grew at the slowest pace for more than 2 years in August and well below many economists' forecasts. Exports grew just 2% in August compared to the same period last year. And exports to China, Taiwan's largest trading partner, fell 9.9% on the same period last year, as COVID-0 lockdowns and heatwave-induced power outages continue to bite. The slower Taiwanese export statistics come as high global inflation continues to depress demand. To find out more about Taiwan's slowing export growth, our reporter James Chater spoke to Nick Marro, lead analyst for global trade at the Economist Intelligence Unit in Hong Kong.
This set of export statistics was well below most forecasts. What international factors have driven that slower growth in Taiwanese exports?
The pandemic-related highs that we saw last year. But the economic outlook is really complicated this year. It's not just the war in Ukraine, it's not just higher global inflation, but it's also, I think, more directly tied to Taiwan, what's happening in China. The zero COVID lockdowns, the power shortages that we saw in Western China in August, all of these things are having consequences for normal factory operations, and that's weighing on demand for Taiwanese inputs. Given the very close linkages between the Chinese and the Taiwanese economy, what happens in China has a very natural effect on what happens in Taiwan. We saw that over the second quarter. It's likely going to happen over the third quarter as well. And so the outlook looks relatively uncertain, particularly when we benchmark against Taiwan's experience in 2020 and 2021.
On a broader level, how concerned should Taiwan be about these drearier export statistics, given how much Taiwanese growth has depended on exports since the pandemic began?
Well, I think actually you raise a really good point in the sense that, Taiwanese economic performance over the last couple of years has been relatively unbalanced. Exports have done well, investment tied to exports has done well, but private spending has really struggled. And that's been despite a number of government stimulus programs and other measures aimed at reviving household expenditure. What we're really concerned about is that these headwinds are going to persist as export growth slows. And this is something that's going to be very difficult for the Taiwanese government to try and rectify. It goes into things like income growth and wage growth. We just saw news that the Taiwanese government has raised minimum wage, but we've also seen news that Taiwanese private industry is resisting even more aggressive wage hikes over their own economic anxieties. And so when we think about the story for 2023, with this picture of softer economic growth, softer trade growth, the story really has to be around whether Taiwan can revive its household spending components, and the outlook there is still very, very uncertain.
And given that uncertain outlook that you just mentioned, do you think Taiwanese growth is too closely pegged to the fortunes of the chip sector alone?
Right. Well, I think, tied to that story of Taiwan being just disproportionately reliant on trade flows, those trade flows are also disproportionately reliant on what's happening in the chip sector. I think the long-term challenge for Taiwan is going to be how can Taiwan diversify its industrial structure away from just these cutting-edge chips. And this is something that the Taiwanese government has been trying to do for quite some time. But I think the verdict is still out in terms of how competitive they're going to be, particularly when benchmarked against not just China, but also other markets in the region, say in ASEAN or Northeast Asia.